Welcome, trade pros. Back at it again with our futures updates. Appreciate your patience here over the last couple of days. I know we haven't been doing this on the Thursday and the Friday since we were doing the Q&A sessions here for any members looking to sign on last minute, answer some of the questions for you guys. And now we're finally back at these updates. So let's get started here. If you guys are new subscribers, welcome to the channel. Welcome to the updates. If you guys are repeat members, welcome back for another update here. So how we're going to do this, as usual, we're going to take a look at some of the drivers that came out during the US cash session open. Georgie covers some of the overnight drivers that come out, as I said, overnight, and how they might affect the stock market. And then in this update, what we do is we take a look at some of the drivers that came out after the open, and we look at how the market has reacted to those and some of the potential levels that you can look to get positioned in so that you can jump on the trend of the day. So with that being said, let's go ahead and get started. Not too much on the economic front since Georgie spoke. We had two major things. We had Fed Chair Powell speaking at 9:55 a.m. We'll take a look at some of the remarks he mentioned. We also had U.S. factory orders. The month-over-month figure came in at 10 a.m. Obviously, Fed Chair Powell, whenever he speaks, that is considered a high-impact event because his words can drive the market sometimes, as we saw yesterday with Bullard kind of talking up the idea of a rate cut. So that's what we've got on that agenda. As far as any remaining scheduled events for today, I don't see any on this agenda. Next thing I see tomorrow of high importance is that ISM non-manufacturing PMI. So for the remainder of the session, not seeing too much as far as scheduled economic releases. One thing that is of key importance is to have a squawk handy just in case you get a wire bomb, kind of similar to what we saw last week when we heard that Trump kind of decided he was looking to throw tariffs on Mexico. And even yesterday, we had the squawk coming in early in the morning mentioning that the DOJ was going to open up an antitrust probe onto, I think Google was the first one, Facebook followed, and Apple joined that party shortly after. And that's why we saw the NASDAQ getting hit quite hard yesterday in the last day's session. So that is the reason why a squawk is super important. And if you're not in the day trading room, if you're not part of our community here where we do have that squawk, I highly suggest you guys go ahead and invest in that, because you can literally make back your subscription when you catch a nice trade as a result of a squawk. So that is all I'm going to harp on that subject. Let's take a look at some of the news here. So during the US session, a couple of things came out. Most notably, as mentioned, Fed Chair Powell was speaking. One of the key notes that he mentioned was that using low interest rates to lift inflation could risk fueling financial market excesses. Federal act is appropriate to sustain expansion, must take seriously the risk of downward drift in inflation expectations. So there's Fed Powell. We also had Mexican President López Obrador mention that reiterates stance that talks with the U.S. are going well, will reach an agreement by June 10th. June 10th, again, is a key date. That is when the tariffs are supposed to start on all Mexican imports into the States. That starts at 5% and has the potential to increase 5% a month, reaching, I think, a maximum of 25% by October 2020 if the immigration issue is not handled. And there was no real mention of what a resolved situation would look like. So that's also something interesting to see, is that they're saying these taxes are pending a resolved situation, but you don't really know what a resolved situation looks like. So that's something interesting. Another squawk we had here out of China. China Ministry of Commerce reiterates stance that U.S.-China trade dispute should be solved via dialogue and based upon mutual trust. So that's pretty much what we've got on that front. Just a bunch of squawks coming out. We have the Chinese Global Times editor-in-chief Hu Zhijin, who's been very, very vocal on Twitter ever since this China-U.S. trade war started. So the Trump administration has ruined the image of the U.S. and is trying to undermine China's development capability with talk about tariffs, Huawei, and human rights issues. And we also had Mexico Foreign Minister, Min Ebrard, mentioned that main focus of negotiation with the states is on immigration. Learned about the U.S. position during the trip to Washington. So that is what we're having from, squawks on both sides. We also had U.S. President Trump calling on NATO allies to increase their defense spending, and Trump also mentioning 5% on Mexico. Tariffs on Mexico will take effect next week. Tariffs will probably be put in place, and we will continue talks. So as far as headline risk, that is the headline risk. Any of these tariff talks, any developments with regards to those tariffs will affect the markets. That's just the way that it's kind of looking at the moment. So that's all we've got on there. You can't really forecast any of this. This will be squawked out. So something that you can look at though, however, is one thing you will notice is that these squawks tend to come at really, really suspect levels, such as yesterday, Bullard came out, started talking up a rate cut as SPOs were near the overnight lows. Then we caught a huge rally off of that. And then right around the highs, you had, what did we have? We had Bullard talking about that. And then we had Apple hit being added to the DOJ antitrust probe. And then you saw the markets just give back any of the gains they made on the Bullard speech. So a little bit suspect, but wouldn't be surprised on that front. So as far as actual economic releases, the main ones we had today, we had May ISM New York numbers come out, 48.6 versus 77.3 prior. This is a 2-year low, pretty bearish. And when did that one come out? Don't see it on the agenda, but it came out, looks like around 10 a.m. And that's really all that we have as far as economic news. Not that much, but a big miss in the May ISM New York number here, 48.6 versus 77.3 prior. So again, that's a 2-year low, and that's all that we've got. As I mentioned earlier, nothing else on the agenda for the remainder of the session, which leads me nicely into our software, into our charts here. Let's take a look at those. Take a look at the quote board, see what the volume's looking like for the current part of the session, and then we will jump into the actual chart. So let me go ahead and switch my camera off myself and onto my screen. Here we go. So what you guys will be seeing now, hey Will, how's it going, brother? What you guys will be seeing right now is that quote board, and let me go ahead and show you what's up. So crude oil, first things first, up top here, 678,000 contracts traded so far on the session. Quite good quite good liquidity here, good volume. On average, we've been seeing around 500 to 500,000 contracts around this part of the session. So 678 shows a little bit more liquidity in this asset today, and that's really good to see as far as movements. It's pretty relatively unchanged on a daily change percentage number. However, if you just look at that chart, you can see there's been pretty good volatility, good movements, good swings in this in the crude asset so far today, and we can look to take further advantage of that going into the pit fade, into the pit close. SPOs, on the other hand, we have good volume here, 1.17 million contracts. Again, it's been a little bit more liquid here in the last couple of weeks on the back of this U.S.-China trade war. We are seeing a lot of money coming into the SPOs, and so this is just about a little bit higher than average. On average, I'd say we can increase it to about 850 to 950, 1 million. So this is a little bit above average, 1.17 million. Key thing here is your daily change percentage. We are up 1.33% from the previous day's close. And this is kind of something we were mentioning in the trading room this morning. I'll show you what I meant by that on the SPOs chart itself. But at the moment, what you can see is good volume in both of these markets, and SPOs obviously a little bit more directional than oil, but nonetheless, great opportunities in both of these markets. So quote board is done. Let's get rid of that sucker and let's open up our pivot charts. Pivot charts here, crude oil, 1 hour time frame here. You got some bar charts. This is used as a general means of what potential market sentiment is on the session. Your pivot is usually a line in the sand. Above the pivot is bullish, below the pivot is bearish. In this situation, however, what I'm seeing is we had S1 yesterday come in at 52. Market rallied off of that off of those 54.30s, rotated back down towards those lows, but could not press back under them, giving us a potential higher low here. And so after about a 10% sell-off from the highs a couple weeks back here, you're seeing, it's starting to form somewhat of a bullish market structure here, albeit still looking back, this is quite bearish. So you can be bullish here, like I said, as long as we stay above that low. I'm seeing a potential press up into that R1, previous R1 here, those previous highs. Once crude gets up into that point around those 55, at that point you can start looking to get back on the sell side. I think we've got to release some of these buy stops here. Any of these shorts that came in here will likely have their buy stops ran. Where would that lead up to? Well, you got a nice 1 hour swing high right there. Wouldn't be surprised. Anyone that's been trailing, anyone that's been getting high, not high, been shortened, has been following those swing highs on the way down. It's quite a popular way to do it is to trail swing highs on the way down, right? So swing highs kind of sit and the market rolls over, makes a swing high, continues lower. Anyone that was short had their stop above there would now move that stop back above the current swing high, above current price. And so what you'll likely see here is something similar to what you saw on that front there. We had a sell-off towards those previous lows, couldn't quite break those lows, got that rotation back up right into those highs, traded them, and then sold off. And I'm seeing something kind of similar starting to set up here. You had that rotation lower, came in, couldn't quite break those lows. Now we're going to press up. First target really is those 55s. The crude market gets back up there. Then you see sellers starting to step on the gas and press this thing back to new lows. So short-term bullish until 55. Once we hit that 55 level, you can be a little bit more conservative. Even 54.30s could be a good level to start looking to flip back to the short side. Until then, you can look to counter trend fade via longs. That's what we're seeing here on crude. On the SP 500, kind of similar market structure here. What you have seen is somewhat of a break of this recent trend. All right, and what we were mentioning in the room was, again, you have a low, came into the low, presses off of that low, comes into that previous swing high, rotates back under, took that low by a little bit. Now we broke above that previous swing high, giving us our fresh new high here. So you got a higher high at this point, and you had a lower low. So that is the first indication that sentiment is potentially changing back to the bull side. Now you are seeing R1 has held a support, pressing up into R2. And it's been quite an extended move. I don't really see us ripping too high from here. Your real magnet for today's session is that 2800 level, big psychological number. Also, you can see that last swing high before that rotation lower was right around that zone. So wouldn't be surprised to see it retest those 2800s, this time as resistance. We'll see what the sellers do if it gets up there. If the sellers do not start showing up here, then we'll probably see a breakout to the upside. However, this is a big level of overhead supply, and I do not see price just blasting right through it. If anything, we'll come up, consolidate, pull back a little, try it again, consolidate, and then rip higher. I don't really see this thing blasting right through. So upside, right side on the SPOs, crude, downside, still the overall trend. However, short term, you could look to catch some longs up into that R1, potentially up into those 55s. So that's what we got via the pivot charts. Let's drop onto our actual 10-tick charts here, get you guys some key levels. All right, so you can see your previous day high sits right around 54.60, 54.51. 54.51 is your actual previous day high right up there. And so we've seen the market kind of pull up off of these lows here, 52.40s, come up into that 53.40, so dollar move there, rotates back into that previous day low. So this has been today's session. Now we've pressed back up higher, and we are starting to give this thing a bit of a run. We are seeing, buyers starting to come in, support this overnight high. We are seeing a bit of a fight between the buyers and the sellers at this level, however. So we'll see how this goes. If the sellers, or rather if the buyers can hold above these 53.20s, This is your 5-day volume profile point of control. Big level. Wouldn't be surprised to see a little bit of a flush into that zone before we get the next move up. So 5370 is your next target. Above that, like I said, 5410 is another key level. Above that, previous day highs. And like I said, if we get up here, this is going to be a level you got to watch out for, as the sellers will likely start stepping in here, as it is a level of higher time frame supply. So something to watch out for. That's what we've got for you on crude. On S&P 500, you guys see the session this morning was a bit choppy, kind of sat around really between these 2763 quarters and these 74 quarters. Good part of the session, we were testing that lower range of the opening range. Couldn't quite break. We had 1, 2, 3 rotations in this level before we saw that breakout. Look where it rotated right back into opening range high, and then another rotation into there, and then we got our launch pad right out. So if this is something new to you, this opening range, make sure to check out our YouTube video on the opening range. That was posted about a week or 2 ago. Very, very good tool for day traders, even swing traders. Granted, on a swing trading basis, you'd probably want to extend it to, you know, the first 15 minutes to the first half hour of market trading, whereas for day traders, anywhere from the first 30 seconds to the first 5 minutes, the high and low, mark those out. There's your opening range, and just watch how the market trades around that. Great levels of support and resistance, great targets as well. Very good tool overall, and we've been finding great success since implementing it in our strategy. So what you're seeing, SPOs right now, clear as day, higher lows, higher highs, just rotated down into these 2784s. Those 85s were a huge level, and this is one of the reasons why having a full order book, just going on another tangent here, but why having the full order book is such an advantage to traders, because when the market opened at 9:30 a.m., we saw these limits up here at the 85s, and we mentioned, you know, they haven't really moved. They didn't really move for the whole session, you know, as the market was trading lower. They weren't really kind of coming down. I mean, they did come down here a little bit, but for the majority, we saw these guys sat up there, and that was a big target we were calling in the room, extended target for the session, and we just traded above that. Now we've rotated back into it, finding some support coming in here, but you just saw that little flash of red. That's showing you limits, selling limits are starting to move lower, looking to get aggressive and trying to press this market down lower. So for the current part of the session, we are kind of stuck in this range here between the 84s and the 92s. Look to potentially buy any dips into those 84s if we see some support holding out. Alternatively, another move up into here and a failure, you can look to kind of fade a short back down into this range. If you don't want to short, up top here, this is a dangerous move. We don't really recommend you guys doing that unless you're, you know, profitable for at least 6 months. What you can do is wait for that breakout, get some rotations into there, hold a support, and then look for the press up. That 2800 level, still huge magnet, and you can see we've got some offers sitting right above that. So thinking that's the target overall for the session, and we'll see what goes from there. Like I said, it's been quite an extended move after that breakout, so it wouldn't surprise me to see this thing kind of chop, maybe get us a little bit of a dip into that Globex session, and then rally up overnight, and likely wake up and come into the office tomorrow with these SPOs around R1 or R2. So it's kind of what we're looking for here. That's all I've got as far as the markets that we're looking at. And the final order of business here is to show you guys how the trade pros have been doing. And what we'll do, just because we missed the end of May, I'm going to show you guys how the trade pros performed into the last 2 sessions of May, and show you how we started off July. So the 30th was a pretty good session, 71% green. The 31st, last Friday, not the best results in the room, 45% were green. So that was our first overall red day on the month for the majority of the room. However, for the month, we finished on average 66.5% green, which is great. Honestly, without this, be a little bit shady, but I'm happy to see, even though, you know, we had 45%, that's just showing you guys the transparency in the room. If you guys are seeing a room that's green every single day, should start asking some good questions. As far as June is concerned, June we started the month yesterday. Pretty good results. Almost 61% of the room was green. Today's session, however, great bounce back. 80% of the room green. We had our highest percentage of traders in the room up for the session, 65.22%. However, we fell just a couple of fractions short of all-time highs here, as we had all-time highs on the 28th of 80.56%, with today at 80.43. So fractional, fractional numbers, but still great to see. We look to continue strong into June, and we're seeing good volatility here on the back of these tariff announcements and on the back of these, political headwinds. So with that being said, that is going to be it for the remainder of today's session. You guys know your levels. You guys know the bias. You guys know where you should be staying out, where you should be looking to get in. Hello, Esme from Paul. Welcome. And that's pretty much it. So if you guys are going to be trading into that latter end of the session, make sure to follow the 3 rules: staying patient, staying diligent. Let me get this now on the camera. Staying patient, staying diligent, and staying disciplined. Until tomorrow, guys, good luck and good trading. We'll see you then. Ciao.